Hello, and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 12th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, some economic data that we got out today. Our initial unemployment claims came in at 294,000, and it was expected to be about 277,000. That is an uptick more than expected, which is bearish for the economy. More people filing for unemployment. One caveat to that is we have such a high discouraged worker rate, which is basically people that were unemployed, filed for unemployment, fell off of that unemployment list, were no longer quote unquote unemployed. Those people could be coming back in and looking for some way to get unemployment. Import prices came in at 0.3, was expected 0.6%. I was a little bit surprised by that, thinking that with the weaker dollar that we were going to see higher import prices also. And natural gas storages came in at 56 billion versus the expected 60 billion cubic feet. So that is a bit of a drawdown. That could be due to the unseasonably cold weather that we've seen in the Midwest in April for the most part. They were getting snow late into April and early May. So that could be what is accounting for that. Anyway, on to the markets. As you can see here, crude oil just barely in negative territory. It was up testing the $47 a barrel handle. Actually went up to 47.02, but now as you can see, down in negative territory, down about 14. It was down well over 50 cents not too long ago. So making a bit of a comeback right now. But crude oil's negativity is bringing down the broader markets and the equities. Actually, NASDAQ is leading the way to the downside. As you can see here, NASDAQ down 35 points, but off of its lows of the day. It's kind of starting to make a bit of a comeback as oil's pushing higher. On to the E-mini S&Ps. As you can see, E-mini S&Ps down on the day, went up and tested that point of control that I talked so much about, and the bears won that battle this morning. As you can see, this is the overnight session, and we were in positive territory, but as soon as the day session opened up, the bears came out in force and pushed this into negative territory. E-mini S&Ps down a little over 6 points right now. Lululemon, this is a trade that I put on, and we're going to be talking about how to set this trade up in detail tomorrow in the webinar, so you can go to protraderstrategies.com and sign up for that. But I went into the June and I sold the 60 puts, and they bought the 62.5 puts, and I did that 2-by-1. So that means I sold 2 of the 60 puts for every one of the 62.5 puts that I bought. And the reason why we do that, it's like your regular put spread, but in that I am trying to create a credit for this. So by increasing my risk a little bit, I increase my probability of profit with it. So I have more risk to the downside than with a typical put spread, but because I did it 2-by-1 and sold 2 of those 60 puts, I was able to collect $1.61 for that overall trade. So I am somewhat bullish on this Lululemon for the reason that I'm long deltas, because that extra 60 put that I sold creates the longer delta trade, and because I collected a credit for it, I would like to see those 60 puts expire worthless. And if the market rallies, then they will all expire worthless. But the best case scenario for this trade would be if Lululemon trades down to that 60 strike right here where the 200 moving average is, and then I would collect that $1.61 because the 60 puts expire worthless, and then I would also collect the width of that spread, which is $2.50. So all in all, I would be able to collect $4.11 for the total trade. Now, because I've collected, because of that big collection, that would increase my break even to the downside. So if you take that $4 and subtract it from the $60 strike that I'm short, my break even is right there at around $56 for all intents and purposes. So it is bearish to slightly neutral because I want it to stay above that 60 level. But if this market continues to rally or pushes higher, then I really don't care because I get to collect my $1.61 as a full credit there. And I'm going to go into all the details as to how you build out this trade, all the rules that I use in order to use this as a trade or to implement it. So go to protraderstrategies.com, sign up for that. It's kind of a expansion on the webinar we did last month and just adding a little bit more risk to that, and it creates a different risk profile and profit profile. So that's all I got for you guys today. I still got on my Disney trade from the earnings. It was looking a little bit better today, but Disney came off. It was up around 102.80 at one point, thinking I was going to get to my 103 puts. Waited a little too long, and now it's come off, and it's trading in the 101 handle. But we'll have to see. There's always tomorrow. All right? That's all I got for you today. If you can't take that, take it easy.